Hey everyone, welcome to Breakout Wednesday for the 9th of May 2024. It's actually obviously Thursday. It's 11 a.m. on the West Coast, 1 p.m. on the East Coast. First of all, remember, this is never financial advice, not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, here's a chart of the All Ords. And obviously we had three or four up days and kind of basing, but it's really gone nowhere in the last few months, right? There's a few stocks I want to talk about just quickly today. It's not going to be a long app. Just going to bang this out. First of all, some of the trades from like a week ago, most of them just kind of haven't broken out, just done nothing. BGA did break out, had a nice run. What else is there? I've been talking a lot about these stocks like PLS, which is just hanging out down here and just been basing for a long time, and been grinding a little bit higher but hasn't really taken off yet. I'm going to talk about a lot more of those throughout the talk, but like MIN I was talking about last week, there is money rotating into these stocks. Okay, the other obvious strength still, which I talked about last week, is it uranium plays. Okay, and for those holding Bannerman from this massive base break back here, well done, because easier said than done holding on to that. Pretty volatile, and some decent pullbacks all the way down here to the near the 200 day, and it is what it is. I know I talked about this last week, but I just think that really one of the keys to making decent money is having the ability to sit with things and not being shit scared that you're gonna turn a winner into a loss. So I know that is one of those cliches, never let a winner turn into a loser, but um, I don't know. I think maybe sometimes that's a little bit bullshit, in the sense that if you want to ever stick with one of these, you're going to have to, be able to withstand volatility and have seen these things pull back. Not saying you let this collapse down here and give you a huge loss, but if you're not willing to see that, unrealized P&L swing around like crazy, then it's probably not the game for you. Is swing trading, position trading, all that sort of stuff. Okay, now let's get on with it. There's only a few things to talk about, really. I want to do a quick scan, so I go up to my Davis boxes. I'm doing this scan a lot at the moment, any box, and just 5-day top confirmation period, just to find bases that have been basing for a bit longer. And then I'm just going to scan and watch this. I've already got done to make this easier. Right now, IGO. Now I've been talking about it a bit later, but this bottoming action here, okay, big downtrend, bang, and then flushes down below it, tests it a lot of times, puts in a higher low, and then that's basing sideways. In the perfect world, this needs heaps longer because these moving averages are all kind of still sloping down, the long-term ones, I mean. But we have now its first Davis box down here, sitting right above this, and the risk reward is nuts. Okay, it's like what I've been talking about on PLS, with crazy risk reward. I think I was talking about this first of all down here, but I've been talking about it since like January, right? So, but let's just go back to what I was talking about. IGO. So, the risk reward down here is nuts. Yes, prone to false breakouts, because it's still kind of in a long-term downtrend. It hasn't really proven itself, but the fact is, like, if you really want to pick up the best risk reward, positions out there, and opportunities out there, then sometimes they do involve ignoring this stuff. Okay, and being willing to have a few false starts. Like this might break out, fake out, come down, stop you out. Then it might set up again. You might take that again. It might fake you out and stop you out. Then on the third time, bang. Okay, you might 10x. You might have risk reward of 10x or 15x or 20x. Okay, it doesn't matter that you had the two losers where you lost 1x. One of your risk units. If you just make 10 times risk unit on the second or the third or fourth, even fourth attempt, shit, I've had ones before where literally on the fifth attempt I got it right. Okay, I think that's what it really takes. You just got to keep having cracks. If the probability sets up again, just because you lost the last time on it doesn't matter, right? So IGO I'm watching pretty carefully because I like that first Davis box. JDU I've talked about a bit. Judo Bank. If you're a mortgage broker or have mates that are mortgage broking in the kind of business space, these guys are doing pretty well. Most of these kind of new neobank startups fail pretty quickly, but there's been a few over the years, and they've all failed to my knowledge. But I think maybe Judo's an exception. Obviously, it would have been nice to be picking this up back here when it was, clearly kind of putting in this bottom action. They're always the same, the bottom action. Hey, you get big downtrends, flushes, tests, and boom. Okay, um, but now we're just kind of in a big base. You see, it's IPOs, classic IPO shit. People just getting rorted up here, and the early people exiting, the people whose shares are in escrow, right? And the brokers making shitloads of money and heading to Vegas, and everyone else just kind of taking a bath. But it's had this long grounding downtrend, and now it's basing sideways. Okay, and there's a lot of upside potential and risk reward there for judo. Okay, here's it on a weekly chart. It can put a lot of work in. You can see it doubling, tripling easily from there if things keep going right for the company. But I think it is worth, I like reading and learning about these companies, stocks, because they are companies at the end of the day. And, if I'm trading something quickly and scalping it, then I might not care about reading about it. But if my plan is to hold this thing and try and ride it properly, I need to know a lot about it. Okay, and maybe everyone's different. Maybe it helps some people to not know a thing about it, but for me, I like to know a lot about the company and read up, especially the ones I'm going to try and hold for a long, long time. Okay, otherwise it's pretty hard to to weather the downturns. All right, now let's just move through these Davis boxes and see what else we found. All right, so look, LLY is on the NYSE, and as you can see here, it's sitting in literally it's one, two, three, four, fifth box. Um, you know, it's pretty mature uptrend, isn't it? It's been going up for a long time, pretty successful company, but I've talked about them before, right? Back when I was in this channel here, LLY, Eli Lilly is one of the main players in the weight loss drug space. Okay, they don't make Ozempic, but they make the competitor Ozempic. I always forget its name, but if you do research on, I've listened to a bunch of podcasts with doctors in that space. They're talking about these drugs, and it's for diabetes and stuff and weight loss, and they can't get enough of it because it just sells out, right? And then they're always sold out, and they're just waiting for more supply, and as soon as supply comes in, it sells out. It's just there's this massive supply demand mismatch that every company wishes they had, and very few companies actually ever have. And that is a great, obviously, position to be in. It's not rocket science. Okay, you got a product that sells like hotcakes. You can't make it quickly enough. You just everything you make, you sell. Sometimes this shit isn't complicated. It's just common sense stuff. There's a reason why LLY has been in this massive uptrend. It's because of that. Okay, and is that going to end anytime soon? Like, I'm dubious. Okay, obviously it's going to end eventually when competitors enter and margins therefore go down, and eventually that kind of moat that they have now, where there's two companies, Novardisk and LLY, that are really dominating that space, and that will change. But that shit takes time. You don't just make a drug overnight, and when there's this much of a supply demand mismatch, then it can be a really powerful thing. And here I'm watching it set up in a really kind of nice flat base with 800, about around the $800 level. I'm just looking at Titan. It had earnings come out 30th of April, which is this gap up day here. Obviously the earnings were good. It gapped up, and then it's just been basing since then. So look, pretty keen on that. I've traded this a bunch of times. I probably should have just bought it and held it, but anyway, the trades have been good, and it's setting up again. All right. Okay. Another one I want to talk about is Rio. All right. Now, I know that I've been bullish, kind of long-term speaking, on the big miners, and I've been pretty open about that. And BH for one has kind of spanked me a bit lately. Okay, but there's more going on with BH than meets the eye. Okay, they've just taken over. The huge all-American mining company. Shit, I forget its name. Anglo-American Mines, I think. Anglo-America, yeah. So, so there's a lot going on behind the scenes in BH. Okay, I mean, I don't really, it seems like a massive deal for BH to be buying that company. But anyway, let's go into that right now. It's going to make their lives pretty complicated, and it's not a very simple, neat process. It's going to be a lot of stuffing around and mess. But I'm rambling too much about that. But if you just take a big picture, right, monthly chart of BH has been going nowhere, right, for three years now, right? Let's look to Rio, okay, because it's a bit clearer on Rio and why I'm still sticking to my guns with these guys. Like Rio, this is a monthly chart for Rio going back 25 years. Okay, massive uptrend, bang, and then just been basing. And so this thing's been basing since it made this high here on the 1st of July, 221. So we're coming up to 3 years, obviously, of absolute basing. Okay, and during that basing, there's been big swings, right? You know, 37 bucks down to 90 bucks. Okay, and now it's come up in this little Davis box on daily data. All right, and it's tightening. Obviously, it's showing, you know, pretty good relative strength. And I just look, my view on these things is that I like holding them in the self-managed super fund long term and picking them up when I can and adding to the positions because the dividends are massive, and you know, I just compound it and compound the dividends. But I also just think from a macro view, you know, there's all this talk about China slowing down and, you know, iron ore exports declining and all that sort of shit. But you know, people have been talking about that for a while. The market knows about that. It's like kind of like when the NASDAQ and you know, it was kind of making its lows down here. That's when everyone was, you know, messaging me, telling me how the world was ending, right, and how tech stocks were going to shit, right here, okay, and like the market knew about all that shit, and it was usually the low, and so I'm just not really a buyer in the kind of pessimistic opinion of people about all that, about the major miners that's kind of floating around a bit out there right now, and I'm just kind of following this base, okay, and just my own kind of common sense in my head that if this big, massive mother of all bases breaks out on Rio, then that's telling me that, you know, I need to trust this more than I trust any bullshit coming out of, you know, newspapers and, you know, people messaging and people's opinions on Twitter, because, you know, everyone knows how useless that is, right? So now the only other thing I want to talk about is what has just happened overnight in America with Shopify, okay, and how that translates to some ETFs. So Shopify on the NYSE has just gapped down big, okay. To check out what's going on, like let's say you're following US stocks and you want to see why the shit did this just happened, okay, well, what then I would do is simply flick to, let's just go FinViz, all right, bang, FinViz, and then I would kind of do my research there. So, you know, you just type in the code. FinViz is an amazing website. It's free for, you know, nearly anything. It's obviously got some paid shit too, but I don't think anyone really needs that. You can go down, see its earnings date here for Shop. Where is it? Earnings date May 8, which was obviously last night. And then you can read all about why its earnings report and what the hell just happened, okay? But Shopify is not new to having big gap downs, okay? Just look, I mean, this thing's damn volatile. And, you know, it's just got this amazing moat and this amazing business, and anyone that's in the e-commerce space will know it. And, you know, they're pretty expensive and they just print money and just create cash flow. And so, but if you transfer that over, and this is why CLDD gap, you know, is in this downtrend and gap down today. Right, and I'm looking at some of these of my favorite ETFs that I've got really, really long-term positions on, like CLDD, and I'm thinking if it can get back down and kind of test this resistance turn support line, this definitely going to add some to it. Even it might not quite get there, you know, it might still be just good value picking up some very soon, actually, you know. And the other one, like Hack, which I've been in, as most people know, for many years, and Hack is just forming this incredibly kind of nice, you know, falling channel, or, you know, flat, whatever the hell you want to call it. I don't think it matters what you call it. It's just a tightening base with massive downsloping resistance, okay? Let's just call it that, right? And I think that picking up some, you know, I think for me, because I've got such long-term time horizon on these kind of tech ETFs, I don't really want to buy breakouts on them. I want to buy things when they're dropping and giving me kind of nice setups where I kind of feel good about myself, that I'm not being a sheep and, you know, plying in at all-time highs, right? That's all I want to talk about today. I'll be back next week, preferably on Wednesday. Cheers, bye.